What's going on, family? Welcome to another episode, another video where we pretty much show you everything in regards to building a online business. My name is Marcus. I am what you would call a legacy connoisseur or a business coach for families. I'm here to make sure that you all get the game on how to build a six-figure family business online. If you're wondering what we've done over $1.4 million over 3 years, so it's safe to say that we kind of know what we're talking about. It's me, my brother, my mom, my dad. We all come together to actually build that family business structure with you all. So let's go ahead and get right into it. Today we're going to be talking about life insurance and infinite banking strategies. How do they connect? What is the difference between the two? How can we implement them? And how can we actually use this in our daily lives today? Okay, I'm going to give you all some use cases so you can actually get some examples, and then maybe throw in some insurance places that that I've used or that are some good use cases for you all to use as well. So I'm going to share my screen real quick because I feel like this is important to actually show visually instead of us just talking off the top of our head, right? So let's talk about it. We're going to be talking about life insurance, y'all. More specifically, infinite banking, okay? That is what we're going to be talking about on this particular video, all right? So I'm going to start from the top, which is life insurance, okay? If you're not aware, and excuse my handwriting, it's going crazy. If you're not aware, life insurance is broken up into two different ways. You have term and you have, what is it called? Permanent, okay? So term is when you die and permanent is when you're alive, okay? When you're living. Let's actually put it that way, is when you're living. Now, term, of course, in our culture, let's be honest, in our culture back in the day, like 20 years ago, 30 years ago, they would only give black people term. They would never give black people permanent. They would never suggest it to them because they knew the power of living and they wanted to keep us under. I remember because my mother told me this, and she actually was in the space. And of course, ignorance at the time, she wasn't aware of the differences between the two, or at least the infinite banking strategies and how it could impact our community, right? They would only suggest her, with black people, only give them terming, with white people, give them permanent, right? Which is freaking sad, right? And so I'm going to be breaking down the differences between the two and how they can actually benefit us. So term, like I said, is for death. Usually they'll give you a decent amount of money. So if you were to, pass away, right, they would give you, cash in exchange, right? Now, there are different strategies, and I'll talk about the trust structure as well. Let me write this up here so that I don't forget when it comes to building that family trust and connecting it to the life insurance policy, right? But usually people would just give this to their children, right? And now their children is so wealthy, but then they don't know anything about money. So they don't know how to use it. They don't know how to manage it. So they're pretty much A-OK. They're pretty much SOL, right? And so, but permanent is very simple. You have two types of permanent life insurance policies. You have whole life, and then you have index universal life insurance or life policies, right? Which everyone knows is IULs. Okay. Now, what's the difference between an IUL and a whole life policy? And I'm gonna actually drag this over here so that I can explain them in more detail. Okay. So the difference between the two is whole life is based off the actual insurance company. Okay. It's based off the actual insurance company. I would suggest going with the company that's about 100+ years old when it comes to, picking which insurance company you would actually want to have a whole life insurance policy for. Now, back up really quick. When it comes to a term, okay, I'm going to break this off in classes real quick. Before I even talk about the permanent, I want to break this off in classes. Okay, so you have lower class, you have middle class, and you have upper class. Okay. With the lower class, I always suggest, no matter what, with the term life insurance policy, that you get a convertible term life insurance policy. What this means is you can convert a term into a permanent. Okay, once you get a certain amount of income. Now, a lot of people are asking, well, how do I know when do I get a term? Like when is how much should I get? Or I'm not making the same amount of money. I don't know if I can get both term and permanent. Like, what is that? Like, what should I do? I think if you're at a lower class level, which is usually 40K below, right? You should be, I'm gonna say 40K and below. I think you should just get a convertible term at this moment in time. That's what I think, personally. If you can afford a permanent, get a permanent, right? But I think at this point, 40K, I mean, if you're making 40K a year, right? 40K a year, if we're going to do the math right quick, right? That's a little less than $4,000. And that's what most people make as well. That's an average person. That's like 3.3K a month, right? You're making 3.3K a month. I mean, let's be honest. Nowadays, you can't even get, if we're talking rent, we're talking utilities, we're talking food, we're talking a car. Nowadays, you need a car. Like, what is it? Meals, mobiles, and a home, right? Like, these are all things that you would need. Your 3.3K is pretty much gone. So that's why I say, like, your rent is probably like $2,000 on its own. With utilities is probably $500. Food is probably like, you're probably scrounging, so you're probably spending like, I'm gonna say $500, right? Car, I mean, let's be honest, that's gone. All your money is pretty much gone, right? So that your car note is probably like $500, right? 1,000, 1,500, that's 3,500. You're in the negative right now. You know what I'm saying? Like, you're minus $200. So you would need to get another job just to be able to pay your convertible term, but it's necessary. Or you need to get a side hustle. I would highly suggest to get a side hustle outside of your job, a high ticket side hustle. Okay, high ticket side hustle. I would definitely suggest this. High ticket means that you can make 10K a month, right? That's the goal, is to make that 10K a month. So you need to get a side hustle. You need to make it so you can at least make an extra 1K to 3K per month. And then that'll allow you to be able to afford the convertible term. But starting out, honestly, you probably won't even make 1 to 3K. You'll probably make like a couple $100. So maybe like 300 to 500 per month, right? Starting out. You know what I'm saying? So like I said, this is why I suggest on a lower class side, go with the convertible term first. You need to just be able to have some life insurance policy because you can't really afford anything else. Now on a middle class is usually, and let me actually look up, let me give you some data on this. Average middle class salary, right? Let's actually do that while we're on here. Average middle class salary in one sentence. I'm using ChatGPT, y'all. Absolutely, we're using ChatGPT. 50K to 135,000 annually. Oh wow. So what's lower class salary? You know what I'm saying? Let's figure that out. Okay, so it's 50,000 annually. So middle class is, let's say they say average is like 70K. So let's say 70,000, right, is middle class. So at 70,000, I would get both a term and a permanent life insurance policy. Okay. And then of course, upper class, they say it's like the top 1%. Top 1%, if you're single, is about 400K in a year, right? So of course, I would also get term and permanent. But in this one, I would probably only get an IUL. With this one, I would get both IUL and whole. Okay, I would get both. Do you get what I'm saying? So this is how I would, use the term. And if my income increases from 40K to 70K, guess what? I'm converting that term into a permanent, and I'm getting another term. You get what I'm saying? And then when I upgrade from 70K to 400K, then I'm just going to add a whole life. And of course, you can add as many as you want as your income increases. You can have as many life insurance policies as you want. But the key thing here is that you're taking your time with creating wealth. So at this point, you should be having a side hustle to increase your income. You should always have a side hustle to increase your income, because you want to be able to leave that 9 to 5 and make that 10K a month with your side hustle. And then eventually go to the top 1%, which is to make 400K minimum a year. I honestly think that your target should be 10 million to be able to actually to make the money that you want to make, to live comfortably and never have to worry about money and inflation ever again, right? 10 million should be your target. But that is pretty much the term side. So let's talk about permanent. Permanent, like I said, it's based off the dividends of the actual insurance company. Okay, so you are getting dividends from the whole life insurance company. That's why I say you want to pick one that's 100 plus years old, because that means they have history. They've lived through pretty much every recession, every negative thing that's gone on, and positive. Even through COVID that just happened, a few years ago, who was making the most money? Life insurance companies. right? People were passing away. So life insurance companies was making a killing at the time, right? Everybody was getting the life insurance policy, right? So this is where, it's super important to actually put things into perspective, right? So dividends. So pretty much if you get a, cash value, which they both come with a cash value. Let's say you get a cash value of like 200K. They will pay you dividends of the whole. Let's say the company let's say 10 million a year. They pay you dividends from that 10 million. And of course you pay a premium every single month, right? And the key thing with whole life insurance policies is that they are more expensive. Whole life policies are more expensive. Okay. Now you're paying a high premium that goes towards your cash value, right? And the dividends from that insurance company compounds on top of that cash value. Okay, that's pretty much what it is. So you have pretty much, and I'll explain this here. I'll explain that in a second. Then now let's talk about IULs. IULs is not based on the insurance company. It's based on the market. To be more specific, the S&P 500. So it's based on the S&P 500. So as long as the market grows, your account will grow as well. Okay, that's pretty much what they're saying here. Okay, so they're going to be paying you interest. You're going to be paid based off interest of the market. Okay, and of course it's the same concept. You have cash value and you have premiums. It doesn't change. Premiums is monthly payments. And the difference between an IUL and a whole life is that it's cheaper. It's less expensive. Okay, you can get I've seen people have premiums of like $62 to $80 a month. Here with whole life, you can have premiums that are ranging from like $300 to $500 a month, and probably more than that, if I'm gonna be honest with you, depending on how you actually design the actual policy, right? But everything's based off the interest that you receive from the IUL. Now, IULs used to be where it was very difficult. People used to shy away from IULs because if the market drops, then you lose money. But now it's not the case anymore. When the market drops, you are now just at a break-even level. You just break even. You're just making a little bit of money or none at all. So if you started off, if you have a cash value of 200K and you know that the market moves at 9% per year or 9 to 21% per year because of COVID, it increased, right? But let's use 9%. And it breaks even, then you're not making 9%. You're making like 0 to 1%, depending on if there's like a heartbeat fluctuation within the market. You know what I mean? Right? So you're making like 1% or 0%. You're just at break even. You're not losing money, nor are you making money. Right? So a lot of people who had IULs before 2020, they weren't really making money in the beginning of COVID. Right? So it's really where that comes into play. Right? So like I said, when it comes to life insurance policies, this is the basics of how things work. Now, let's talk about how this relates to infinite banking. Okay. How does this relate to infinite banking? And if you're not familiar with infinite banking is just a strategy on how the Rockefellers, the wealthy families, have been able to build wealth over time. Okay. How they've been able to leverage life insurance policy while they're alive to be able to invest in different avenues and stuff of those natures, right? And that's pretty much infinite banking is. Okay. And so what we do is we're going to go back to this cash value that we talked about before. Okay. Let's say we actually have a cash value of 200K that we can actually take out of. And if you're not aware, when it comes to life insurance, you have the premium, right? So this is the premium here, and this is the threshold. I always forget what the terminology is of what the threshold is called. So don't judge me for not knowing. But how it works is you pay a monthly premium every single month, and you're not able to borrow against it. Okay. This is the borrowing zone. Okay. You're not able to borrow against it until you pass a certain threshold. Okay. So let's say this threshold is 10K, right? And everything below this 10K, everything below here is you not spending 10K. So you're pretty much just giving back to the actual life insurance company until you pass a certain threshold. Once you pass that threshold, that's when you can actually borrow against the actual policy. And this is the first step of infinite banking. Okay. So that's pretty much how it works. So when we're talking about infinite banking strategies and not say 200,000, this is after the threshold. Okay, you've already passed the threshold. This is money that we're actually able to borrow against to invest in different business ventures. Okay, so let's say we borrow against this 200K. Okay, let's say we borrow against this. The point of an infinite banking strategy is, let's say this is your policy. Okay, you have 200K in your policy, and you want to invest in, let's say you want to build a family business, right? You want to start, building into this particular business venture that you want, an online business, right? You want to get into this online business space, right? And you want to be able to, let's say, buy an existing online business or start your own existing online business, right? It doesn't matter. But let's say you want to invest into building a business and you just need the capital, right? You're working a 9 to 5 right now, right? Let's say you're working a 9 to 5 job, right? And you want to be able to invest into this business. What you would need to do as the person here, you would need to go into your policy, call them and say, hey, I'd like to borrow money. Now, of course, you can't borrow the whole 200K. You can only borrow up to 85% of the policy. Okay. You can only buy up to 85% of the policy. So if we were to do the math, let's say $200,000 times 85%, man, that's a number that I would keep a healthy number on, right? So that's 170K that you're borrowing from. Now, the key thing here is that you're borrowing from this life insurance policy, but the 170K is still in the account as if it never was removed. This is what you would call uninterrupted compounding. Okay. So even though I'm borrowing the 170K, the 170 is still in this account. Okay. It's called uninterrupted. Even though I borrow it, it's borrowed. Borrowing means that I borrowed it from the account, but in life insurance words, even though I borrowed it, I still have the money there. It's uninterrupted, which means it's still compounding on top of the money on there. So I still have 200K in the account. And what I'm going to do is then I'm going to pay it back with interest. Okay. Now let's say that I borrowed 170K. That 170K I'm going to then put into the business venture, right? From that 170K, my goal always is to at least have a 2 to 3x ROI of my investment, return on investment. Okay. 2 to 3x return on my investment. Okay. So 170K times 3 is $510,000, right? That I just made. Now, mind you, I'm only going to put back the 170K that I just told you back into the policy, right? So if that's $510,000 that I invested in, right? That leaves me with 340K positive. And some people think that's a bit aggressive, right? Some people are like, you know what? I just want 20% return on my investment. Some people say I want 50% return on investment. Some people say I just want to be in profit, right? I just want to break even. Me personally, this is just my rule. I want to be able to make an ROI where it's worth it for me. That's just me. So infinite banking is just a strategy. This is not a savings account. This is not a regular way of doing things. The infinite banking strategy allows you to be able to borrow against your policy to be able to invest in different assets that you want to invest in. And the key thing here is that if this 200K, let's use this. Let's say we never paid back the money. Right? Let's say we never paid it back. This 170K is going to be deducted from our cash value. So that means that I will be left with 30K in my policy. Okay. Which means even over time, this is still going to go up. Okay. Even over time, it's still going to go up. Let me actually draw that better. A clock, right? Even over time, it's still going to go up. Compound, right? So this is the key thing when it comes to, building infinite banking strategies, leveraging other people's money to be able to, build that generational wealth. Now we're talking about generational wealth. Let's now talk about trusts. What do we do in these type of situations when we have a trust involved? We have a life insurance policy. We don't want to just have it, like I mentioned before, where all the money just goes to one particular person and then they're just going to run the bag up every single day And then what's going to happen is they're going to then, after like a couple months, run out of money and they're back to square one. No, what we need to have is a family trust. Put this up under a family trust. Have the trust be the beneficiary and the owner. Okay, be the beneficiary and the owner of the life insurance policy. So you have the family trust up here, and then you'd have the policy down here. Usually people would put the children as the beneficiary. No. We want to put the family trust as the beneficiary, and then we want to have it where the family trust dishes out the money to the person. And so what that does is now the child is able to borrow against the trust, and now the trust is able to now make income, because guess what? The trust can establish other things. It can establish business funding or credit funding in general. It can now start investing in businesses, like we mentioned before, on a grander scheme. It can now start developing what we like to call family office. There's so many different things that come with building wealth, y'all, that you don't even know. It's so crazy that you want to make sure to invest in. Okay, this is something that is super important. So this is where the family trust will come into play. It's very simple. Hopefully this process makes sense. I know I broke down a lot on this video, but this is pretty much everything in regards to how life insurance can play a role. You can invest in different businesses and still make profit at the same time. So I hope this was able to, solve some problems, give a better explanation on how infinite banking and life insurance works, and the visual demonstration as well. So hopefully this helps. I appreciate you all, and I will see you in the next video. If you want to learn more about this, click the link in the description. I have a free training that will literally teach you everything about what I just talked about and how to actually get $6 million for your family in funding. So appreciate y'all, and I will see you in the next video. Peace.